Hi there and good morning. My name is Dean Heskin. I'm President and CEO of Swiss America Trading, and you are tuned in to our podcast, The Secret War on Cash. And for those of you who are brand new, thanks for being here with us. And for those of you who are back again, welcome back. I have also to welcome back Chris Agelastos, my co-host. Good morning, Chris. How are you?
Good morning. Doing well, thank you.
We have warm weather here in Scottsdale, Arizona, just in time for the Wasted Management Open that I guess officially began yesterday, but won't be full swing until Thursday. So we've got I have no plans on going. My days of doing that are done. How about you?
No, I was just talking to Courtney about it. We have fond memories, but there's a lot of other more peaceful things I'd rather do at this point in my life on a weekend.
Pretty much sky's the limit in terms of more peaceful things, that is for sure.
That's right.
But
It's fun, but it's a bit of a young man's party, is what it is.
it's become quite a show. What do they call it? The greenest show on grass, and that's because of
That
the waste management connotation there and
okay?
all of the recycling and things of that
Yeah.
nature.
Although wasted management probably is more of an accurate description, as you mentioned there.
Yeah, and for people who are tuned in who've never been, I know a lot of people I run into that it's literally like a bucket list item for them.
Oh,
And
sure.
I don't know if not to digress too much on this, but I found out this weekend. I guess a lot of people make this like a destination trip, so they'll plan golf and all the things.
Hmm.
And golf courses actually kind of like Uber implement flex pricing. So a course that you could have played golf at 2 weeks ago for 100, $200 is now like 500 plus. And
Wow.
people are paying it. I mean, it's it's crazy. It's as soon as my work week is over, I think I'm going to head up north for a little bit and get out of the mayhem, and I'll come back when it's safe. So
That sounds
anyway,
nice.
well, let's talk about rising prices. Let's talk about gold. We've got
Yeah.
two articles today, both of them from Watcher Guru. And I think for those of you tuned in, if you kind of are sitting there looking at the world around you and you look at all this chaos and you're wondering what in the world to do, what's the best thing to do with my money, where are things heading? This is a pretty aggressive. I'll tell you this, Chris. In all the years I've
Hmm.
been working in the realm or the area of finance, it's not usual or often that you will find a prediction coming out for like the next 5 years. I mean, if you think about that, they're
Yeah.
saying here's a gold prediction for the next 5 years. It's bold in so much as that, Trump's got 3 more years as president. So there's going to be an administration change. You've got right now, the world is, to be kind, I'll say, in kind of a state of financial flux. And to map this out 5 years, I think some might say, okay, well, that's just a little aggressive. It may be just a little too bullish. But I think it really just speaks to the strength that we have been witnessing over the last few years in gold that, that we'll talk about here in a moment, they're saying is going to
Hmm.
only continue into the future. So I'll let you kind of get into it. But one thing I did want to, that really caught my eyes is it as it relates to some of the driving forces here. One of the things that they cite is China,
Hmm.
and China. We've all been hearing in the news for a few years now how much gold central banks have been buying. They've been buying it up at a record pace, as has BRICS. But China, they say China continues to stockpile gold behind the scenes. They acquired over 10 tons of gold in November. That is 11 times more than officially reported by the central bank. And that's according
Yeah.
to Goldman Sachs. So, I mean, it really just speaks to, the old adage, and I think you've used it on our podcast before, look at what I'm doing and not what I'm saying. And if you
Yeah.
look at what these governments and these institutions are doing right now, is they are stockpiling gold. And that's why I think we all should be doing that.
Yeah, I think it's especially telling that they're only admitting to about 10% of what they're actually buying. I mean,
Right.
that's got to tell you something right there. They're stockpiling, and they don't want everybody to know. And why do you do that? I mean, one of the reasons would certainly be because you're trying to strengthen your maybe your new BRICS currency. You're trying to strengthen your own nation. You're getting rid of dollars and shifting to something tangible, and you also want to kind of corner the market and buy it at a better price. So there's a lot of reasons for them to be misleading about it, and none of them are necessarily good for us or good for the dollar. And like you, when I saw this forecast at first, they were talking about was 13,000 approx, or no, sorry, 12,000 per ounce by the end of 26. Yeah, and
Yeah.
19.4. So almost let's call that 20,000 an ounce by the end of 2030. And I thought, well, boy, 20,000. That sounds like a big number. But if gold does what it's done the last couple of years, we'll hit this number. And they're giving us 5 years to do it, which in our experience usually happens sooner, especially the
Right.
last couple of years, right? So yeah, if we're at approximately 5 now, we double to 10. 10 doubles one more time to 20. You can see how easily we can get there. And so I would tell people, when you look at it logically like that, instead of just thinking about how big that number sounds, it really shows you how much growth we could see in the next couple of years here.
Oh, for sure. Well, and I think, Chris, what it speaks to as well is the price of gold, price of silver as well, which we'll get into here in a moment, is really kind of irrelevant to the discussion at this point, because what's happening is these countries and the banks, et cetera, investors as well. We talked about that in I think it was our podcast from last week. They're getting out of debt encumbered assets, excuse me, and that's where I say the price becomes irrelevant, because all of the assets that these banks, these governments, these institutions, are typically or traditionally dealing in, even if it's a currency, a treasury, you get right into the stock market. It's all just a piece of paper that has value based on confidence. And part
Mhm.
of that confidence is starting to wane, and it's starting to wane quickly. And that's why you're seeing them, the prices become so secondary. It's a matter of, it's kind of like there used to be an old expression, well, I guess it's still around. He who has the gold makes the rules. And they know that, when something finally does give or potentially break, having physical metal in your hand is the key, not an ETF,
Right.
what do you call it? Futures contract on the COMEX.
Right. A
The
piece of
actual
paper that says,
physical
I own
metal.
gold. I swear, look,
Right.
I own gold. No.
Right. Like the old saying of, would you rather have a life preserver on the Titanic or a certificate to have a life preserver on the
That's
Titanic?
right. That's
I'll go
great.
with the life preserver myself. Well, then let's talk about silver. So we've got that happening with gold. Here we have as well another 5-year prediction for what they see happening with silver. And you do have a very strong investment demand that is entered into the marketplace. But in addition to that, one of the things they really touch on here is all of the industrial uses that we're finding are where silver is necessary or needed,
Mhm.
and areas that are only going to continue to grow and develop. But again, on top of that, it's not just one or two things that are driving the metals markets right now. It's a plethora of factors. There are a ton of things that are all contributing to it. And it's, you take an article like this and it just hits a few high points, but we could just as easily list 20 other things.
Yeah. Yeah, and what I like about this, and they point out obviously safe haven demand, for silver, just like there is for gold, but also the industrial demand. And so you really have multiple drivers. And I like that they pointed out AI data centers, because I always talk about electronics and computer chips, manufacturing, using silver. But it for whatever reason, it just hadn't dawned on me, these AI data centers that they're building. There's some big ones going up in the Phoenix area here now.
Right.
Huge,
Everywhere.
huge facilities. Yeah, and you hear people talk about quantum computing and these AI, AI software and data centers, and that really shows you how exponentially the demand could go just in the technology sector.
Right.
Not to mention the solar panels and the other things that we always talk about. And so when you couple that with the safe haven demand, and like we point out on here, you can't print more silver, you can't print more gold like you can cash. And so people are looking at that, and also people that maybe say, well, gold is a little bit out of my reach. I only have $500 or $1,000 to buy here and there. Then the silver is much more attainable for those people. And there's a lot more of those people in the world than there are people who have larger chunks to put towards gold. So when you combine all of that, it's easy to see how same thing here. Some of these predictions now, I saw 1,800. They're saying potentially by the end of 26 and 3,600 by the end of 2030.
Well, and it's interesting you bring up the point of it, being a more affordable entry point for people. Literally just this morning, I've been back and forth texting with the son-in-law of one of our clients who wants to get in metal, and his exact words via text were, gold's too expensive for me right now. I want to look at getting into silver.
Mhm.
And so, look, silver is not to be. I mean, silver and gold. Yes, gold is more expensive, but they're byproducts of one another. They're sympathetic metals. They tend to trend the same way. So, silver is an excellent place for anyone to get started. And on that
Yep.
note, if you have not contacted our office to learn more about physical gold, physical silver, you have questions or you'd like some more information, I encourage you to either call or text us at 1-800-289-2646. You can call or text at that number, 1-800-289-2646, or visit us online at www.swissamerica.com. All the information is free. We'd love to talk to you, answer any questions you have, or if you just don't want information that you can read, just let us know or register online. We'll send it out to you. And at least get started with that. And then I think before long, you'll find yourself really understanding where there's a need here, and that need can be filled by putting some metal into your portfolio. So, thank you, Chris. We'll look forward to
Yep.
talking more about this in the future. For those of you who are with us again, thank you. And for those of you who are brand new, if you haven't subscribed, please do so. And we'd love to talk to you more in the future. Have a great rest of your day, and we'll talk to you soon.
Yep. Take care.